What goes into the mortgage application process? What's going on, guys? This is Ivan Simental, your mortgage advisor, and today we are going to talk about the entire mortgage process and what we look at, what you should expect, timeframes, and all the nuts and bolts that go into the entire process of your loan application. Before we start, I'd love for you to hit the like and subscribe button down below. And as always, we appreciate you tuning in to the Mortgage Reports podcast. We are here because of you. We are here to educate and answer any questions that you guys may have. So in today's episode, we are talking about the process, what to expect first. So let's dig in. The first thing that you are going to do is you're going to either have your virtual application meeting, your virtual consultation, whatever the specific loan officer calls it, or you'll have an in-person meeting, right? And in this meeting, think of it as the initial get to know you stage, right? We ask questions in regards to your finances. We ask questions in regards to your employment. We ask questions in regards to credit and all that nature. We try to gather as much data up front. And while we are gathering data, we are also getting to know you as our borrower. And we're asking questions like, do you like us to text you? Do you like a call? Do you like email? What's your favorite form of communication? What's the best time to reach you? What's the worst time? What's the absolute no time to reach you? Do you prefer mornings? Do you prefer evenings? We're getting to know you as our client and what you like and dislike. So you're sitting in front of your loan officer, whether it's on camera, on the computer, or in person, right? They've asked you a large set of questions and they've asked you everything basically under the sun. By this time, if you are meeting them in person, they should have asked you for a certain set of documents. And these documents are extremely crucial to your pre-approval process because without these documents, we can't pre-approve you. We don't know your finances. We don't know your credit. We don't know your assets. We don't know employment. So what are these documents that they have requested from you? Number one, they should request 30 to 60 days pay stubs. Number two, they should request 2 years most recent W-2s. Number three, 2 years most recent tax returns. Number four, 2 months worth of bank statements. And depending if you're going VA, they'll ask you for your DD-214. So these are the main documents that they will request from you. And then based off of your employment, they might request other documents, right? So if you're self-employed, they'll request additional documents, or if you're bonus, they'll request additional documents. And depending on what you're using for your down payment, they might request additional documents based off of that. But those are the main documents that we will request from you to try to get a pre-approval. So now that you have these documents, you've turned them into your loan officer, you've had an awesome meeting, your loan officer says, awesome, let me work on your pre-approval. I will have an answer for you. Typically, to be safe, anywhere from 24 to 72 hours is how long the actual pre-approval process takes. Now, during this process, let's go over what is happening and what we do and what operations does for your pre-approval. So we take a look at your documents, we take a look at your pay stubs, and in these pay stubs, we will determine, okay, are you getting overtime? Are you getting bonuses? Are you a salary, or are you an hourly employee, right? Based off of that, we'll take a look at your tax returns and see if everything lines up. And then we'll take a look at your W-2s to see if everything still looks good and everything lines up. What we do is we have an income calculator. It's an Excel spreadsheet. Some of us use an Excel spreadsheet. Others have different documents, or others, depending on the bank that you're with, they might have a specific app that they might use to calculate income. We input the data into this spreadsheet, and it will give us an average, or it will give us how much income you make, right? So now we have the figure of, let's say, 5,000. Borrower, you make $5,000 a month, averaged out over 2 years. This is what it calculated to. Then we take a look at your assets. Based off of your assets, we will determine, okay, borrower makes $5,000. They have $50,000 in the bank. They can afford X house based off of these bank statements, or if you provided 401k or any type of asset verification, then we will determine, okay, based off of what we see here, borrower can qualify for X amount, right? So we put it in the system, everything is good. We have $5,000 of income, we have assets for X amount, and then we take a look at your credit. We take a look at, okay, no collections, no bankruptcies, no foreclosures, credit looks good, 700 plus FICO score, everything is great, on-time payments, no lates. So this is me looking at your credit report. Everything looks great. And so a great borrower all around. So based off of all of this information, loan officer will then say, okay, we think that they are good for 500,000, right? 500,000, putting $50,000 down. They have the money in the bank. They have reserves. They have money for closing costs. Great. It's going to be about 70,000. Just throwing out numbers. These aren't literal figures. This is just so that you can get an idea of what is happening on the back end while we're working on your pre-approved. So then what we do is we package it up nicely. We run it through what's called Desktop Underwriter or Loan Prospector. These are the two automated underwriting systems that we use, depending on if you're going Fannie or Freddie. We will then submit it to the specific party, right? So, okay, great. We have your loan. We've submitted it to either DU, Desktop Underwriter, or LP, Loan Prospector. Then we submit it. Once we submit it, it takes about a couple seconds, sometimes a couple minutes, depending on the file. It's strange. We don't know why some take longer than others. It will give us an approval or a denial. We take a look at the conditions that the automated underwriter requests of us, and we notate that, right? So this is where myself as a loan officer, and I know a lot of other loan officers go above and beyond and do this because it's just safer, especially in today's market. It just makes sense to do this. We have an approval. Everything looks great. Now, this takes us about an hour, 2 hours, depending on the file. This specific part takes us about an hour, 2 hours. Now that we have your approval, what we like to do is send it to underwriting, right? The reason why we send it to underwriting is because I want to be 100% sure that the information that I have here matches what the underwriter is going to see and say as well. For whatever reason, there are times where our income calculations are different than the underwriter and vice versa, right? So what we want to do is package up that file, all the documents, everything that we possibly need for a fully underwritten pre-approval. We send it off to the underwriter. The underwriter takes anywhere from 24 to 48 hours or 72 hours, like I mentioned. They will do the exact same thing that I'm doing. They're just double checking everything, looking deeper than I would look. That is what an underwriter does. That is why I highly recommend when you're shopping or when you speak to a loan officer to ask them or to tell them, hey, I want my file fully underwritten before I put any offers on. So now that the underwriter has it, they take a look at your credit. Does credit look good? Does everything match up? Awesome. They take a look at your income. Does everything that Ivan put in the file match up? Does all the income calculations match up? Does everything based off of their bonuses, their commission, however they get paid, does it all match up? Great. It sure does. They take a look at your bank statements. Do the assets all match up? Does everything look clean? Are there any irregular deposits in their account? Do they have large cash deposits? If so, what are they? Verification will be requested. And so that is what the underwriter is doing during this time frame, right? While you're waiting anxiously at your house, this is what's going on. We are triple checking, double checking, making sure that the pre-approval that we are going to issue you is 100% solid. So now that the underwriter has reviewed everything, 24 hours later, 48 hours later, however long that underwriter takes, we will then deliver the good news to you and say, congratulations, you are fully approved. Everything looks great on your file. Your income looks good. Your credit looks great. You have the money for the down payment. You are fully underwritten. And this, in a nutshell, is what's going on behind the scenes, right? The underwriter and operations and your loan officer are all working together to try to get this loan approved for you. Fully underwritten approval is what we call it. Now, very, very important note to keep in mind is the underwriter has not only your file, but possibly another 15, 20 files that they need to do this exact same thing. And this is why we request or we ask of your patients, same thing with your realtor, we'll ask them to be patient because it's better to be safe than sorry. This is what should become standard here in the near future. Just because we don't want people to lose their money, their earnest money deposits. We don't want people to lose out on potentially buying a house. So this is why it takes us a little bit longer at times to do a fully underwritten approval. It's for your best interest and our best interest and everybody's best interest. And that's really what goes on. Just think about the underwriter having a microscope and taking a look at everything line by line to make sure that you are a well-qualified borrower. All the documents that you turn in are legit, depending on the type of income that you make. Other types of documents that might be requested from you, depending on your employment, are 1099, all of your schedules, if you are a business owner, depending on how you file your tax returns, and if you have business bank statements, or if you don't want to use your business bank statements, and the articles of incorporation. So all of this will be looked at depending on your employment. If you're a straight W-2 earner that earns $60,000 a year and doesn't receive any bonuses and has great credit and has a down payment, this is a straight up easy pre-approval because nothing really changes over the past 2 years, right? Now, if you're an individual that is strictly commission and 1 month you make $1,000 and then the next month you make $25,000, and then the next month you make another $10,000. So we take a look at all of this and we have to average all of that out. It's a bit more difficult to look at people's incomes that are bonused or commissioned or overtime or hourly and don't work their full 40 hours, and sometimes they do and sometimes they don't. This is what the underwriter is looking at. This is what we look at. So I hope I was able to answer questions that you might potentially have in your head. If not, leave them down below. We'd be more than happy to go further into this topic if possible, and answer any more questions that you guys may have, maybe on a live. But we're here to help, and we appreciate you tuning in, and I hope that you enjoyed this episode. Again, thank you so much, and have a blessed day.